Hello, everybody. I am Crypto Kenny. This is Web3 Weekly. Welcome, welcome, welcome. You guys know the drill. If you are not following Web3 Weekly, there's a little button right down there that says follow. Please push it. If you do not have notifications, so there's another little button right next to the follow button. It's called notifications. Please push that. Please like the videos. Please comment or dislike the videos. I don't care. Like, dislike, let us know what we're doing good. Let us know what we're not doing good. You know, comments, be mean, be nice, whatever. Do something. You know, put yourself out there. All right. This is Web3. So anyway, I'm Crypto Kenny. I'm joined today by my co-founder of Alpha Mutants, Nate and Tate, and I'm also joined by Cyan. He's a member of the Alpha Mutants, but you guys would probably better know him. He's one of the team members over at Roundtable. We've been doing some work with them lately. We're looking to do some collabs in the future. They're very heavily based around gaming. So we've got him here for today because we're going to do a market overview and get some different opinions about some of the big stories over the last couple of weeks in the market. Before we start, if you guys have not seen some of our other videos, we do interviews with specific project teams, founders. Those are on the channel there. I did jump on and do some calls and just some basic information in the crypto space. So definitely follow us, guys. There's some cool stuff going on. The last video we posted was actually with Cyan and Mr. Biz of the Roundtable talking about what they're doing over there. It was a really, really good discussion. And if you like really deep discussions into the future of Web3 gaming, you definitely want to check out that video. And I'll leave a link up here at the top to that video so you guys can check that out. If you want to follow anyone on this video, we'll have our personal links. Everybody posts stuff regarding different areas of crypto. With Mr. Biz, you'll see him post some of his videos from the Roundtable's channel, and you guys can check out some of the stuff that they're getting into. Nate often posts stuff kind of in regards to trading, basic news in the markets, and he also has some instructional videos on leverage trading and things like that. So definitely follow him. And me, I just post whatever gets people to respond to me. So I troll a lot, but you can follow me also if you haven't already. Anyway, so let's get into the market, guys. So it has been a super, super busy couple weeks in the markets. We have stories out the wazoo, but I do think that it would behoove us to speak at least briefly about probably the biggest story in the last couple of years in the market, and that is the completion of the Ethereum merge to the proof of stake mechanism, and kind of what the ramifications are of that currently. So I'll go for the first 10 seconds here and just explain to you guys that those of you that don't know, Ethereum, long-time proof of work blockchain, which meant that the transactions on Ethereum were being verified through hardware that was, in people's homes, that was in facilities all around the world. As it has switched from that proof system to the proof of stake system, which means now validation is done by pooling together pools of 32 or more Ethereum, and validation is done that way. Now the stories and the positive stories we'll talk about, that it is more economically friendly, which it is. It's 99.5 or 99.55% more economically friendly. Because we're not running all that hardware. There are some caveats, so we'll talk about some of those caveats here today. But anyway, let's really quickly talk about. So Nate, we'll start off with you. What did you feel about the movement of ETH, like during the merger, before and after, and was there anything about it that surprised you at all? And then maybe just expound a little bit on your thoughts about the movement from proof of work to proof of stake.
I think for this one, it was, for most people, they understood the ramifications of it. There's still a lot of people who are a little bit newer in the space that thought, it was going to be gas fees were going to just astronomically go down. That is not what this, merge was. That's coming, a few rounds later, as this thing, it's like a 5-part process or whatever. But for this one, it had a lot of ramifications for the underlying development of ETH, not from a user standpoint, but more from a development and for outside market standpoint as well. Because most people don't understand, just switching off the miners and going to proof of stake is a big deal for the network. but it's also a big deal outside of crypto, right? I mean, how you've seen, graphics card providers and silicon chip, and I'm an architect, as I've stated in the past, but we do a lot of work in real life on silicon plants, and so even that gets affected when they're not constructing as much, just because there's not a demand for it. So chip sales go down. Obviously the rest of the world, the way it is with the economy and all that, it has a massive impact. But what you were talking about is from an economical standpoint is energy consumption. Like, God, it saves a ton of energy, right? I mean, and that's just one network. But I think overall, like from a development standpoint, it really made a lot of sense to do it the way that they did. It's just not sustainable to keep having, I mean, anybody that's tried to ever mine successfully knows that is a very competitive game. I mean, you yourself, Kenny, you have miners, but every few years you constantly have to stay up to date with the new mining equipment. Otherwise there's no way you can compete on the network and have a substantial share. And that is big. Now it's gone to you have 32 Ethereum, you stake it on a validator, that validator represents the network. And that's how it's secured and processed transaction. That's big. But I don't think from a user standpoint, users really feel the ramifications of quite how big it is.
Yeah, this is something I'd like to add for you, Cyan, because you're obviously a lot deeper into the gaming side of the space than maybe just like overall market guys are, like me and Nate. But how do you feel about the arguments, proof of work versus proof of stake? I mean, do you have any opinions on, because normally the argument is that obviously proof of work is far more secure, right? And now there's been these arguments that says, well, it's not that much more secure. But I mean, those of us that understand that yes, it is. But versus the scalability, right? So what are your thoughts on the proof of work versus proof of stake? And I mean, does that affect gaming at all? What do you have any kind of personal thoughts on that?
Yeah, I think that it's like case dependent on what makes the most sense. So I think with like my philosophy on Bitcoin, and I think the general philosophy of like Bitcoin, I would never want it to go to proof of stake. Like I'm happy that Bitcoin will always be proof of work. I think for what it's trying to do, it needs to like put all of the skill points into that kind of security, right? Like that's like the one thing you have to get like super, super, super right. And so it's like, if you're dividing like your resources and where you're going to apply them, that's where you put it. Whereas I think Ethereum, for what it wants to accomplish, and by the way, just to explain why I feel that way about Bitcoin, it's obviously because of like, if it's going to be that like fundamental asset that is like, nothing can happen to it and it's secure, it's your keys, it's your hands, like for it to like be the digital gold that it wants to be and all that stuff, it has to be secure. That's like the number one thing. So that's why I think that Ethereum, I think, is obviously it's much more about what you can do with Ethereum and the computation power, the network of it, and how you'll have all these things building on top of it. So I actually think the ability to scale and like the practicality of it, and being able to like continuously like have more output and more productivity on it, without actually knowing, the intricates of the pros and cons of proof of work versus proof of stake, I would just sit there and say like, hey, yeah, the more scalable, kind of more practical, quote unquote, solution for something like that makes sense. And that's why I've always, and plus like even stepping out of it and just looking at the meta narrative of like the way the attack vector on crypto, which is like, oh, the environmental stuff, like, which I think is pretty bullshit anyway, but like, but that was a legitimate attack and that you were always gonna have to deal with that. And now they go this direction, you don't have to deal with that. And that's important because Ethereum needs I think Web3, it needs this mass adoption. And so like the less attack vectors you have on it that would like scare people away from it or make governments like have some kind of regulation about it is obviously better. Whereas I think Bitcoin, you wouldn't want to make that trade-off, so that's kind of my initial thoughts.
It's important to understand that because I don't want to derail this too far, but for everybody, you just hit on an extremely important aspect, right? And most people don't realize that unless you're looking at the on-chain data. But once Ethereum went to proof of stake, everybody backs the validators, right? And they pick which validators run the network. Well, Ethereum, once they swapped over, there were about 2 nodes that were running 80% of the network, which is that's not decentralized, right? Especially if a government, or a large company or somebody who controls all those can, it essentially it creates a monopoly. They can establish fees, in transactions in and out. They can, if they go down, it hurts the network, right? Bitcoin, you don't want that for Bitcoin. The whole reason Bitcoin is so secure is because there's, miners everywhere across the world. Like if you look at the mining map compared to Bitcoin, and most people don't understand because everybody in Web3 utilizes Ethereum quite a bit, but most people don't realize that Bitcoin use case, there might be more transactions happening on Ethereum day in and day out, but from a currency standpoint, like Bitcoin dominates it like 90%. Like it's not even comparison. And so the rest of the world truly relies on that as a use case, whereas Ethereum is still, for everybody can argue however they want to argue, but it's still pretty much experimental, right? I mean, there's still a lot of things being done on it that are futuristic and really going to help the industry move, miles. But for the most part, most of the world's economy is not sitting on Ethereum right now. Yeah. And that is super important to understand on how the network security matters. And you don't want that for Bitcoin.
Yeah, and I think that, obviously that we could go into, because that's one of my favorite topics, is just the perfection, the algorithmic perfection of Bitcoin and what it is. But I as far as Ethereum, because we don't want to off topic that right now, yeah. But with Ethereum, my personal belief set is I agree with Cyan that its use case determines whether these different governance mechanisms, like how they work, right? I do say that. The one thing I will state is because we're so early on in the switch over to the proof of stake, that right now it's pretty lopsided, man. Like most of the there's a large portion of validators moving through like big conglomerates like Coinbase and some of the centralized exchanges and stuff. And I'm hoping that we see a spreading out of that in the months to come, because right now it's pretty heavy, and whenever you have a super heavy cluster of validation in one area, especially in one country, it becomes dangerous, because then there's centralization issues. But overall, I think it's great. Long term, I think obviously scalability, what Ethereum wants to do. I think it'll be interesting to see these next couple upgrades, because like Nate had mentioned, there's I believe 5 more stages before we see, because we have to get sharding out, we have to get these different stages done to actually be able to improve the transaction speed, decrease the gas fees, and all that stuff. If all that goes through well, and we see a moving out of the validators, I'm completely happy with it. But that's it's a story that's still being written, right? So let's move to something that's been recent and pretty big. We'll try to do some technical and then non-technical topics. But so in the NFT space, so you've got stories running currently that say, well, NFT sales are down 98% and all this stuff's going on. But there's been an interesting thing. So Tyler Hobbs, which those of you that don't know, Tyler Hobbs was the creator of Fidenza, which is by far the most popular collection inside of the art blocks ecosystem. And these things have maintained value for a long time. They haven't been unaffected by the market, but they've maintained value for a long time. I personally really like Fidenzas, but he actually dropped another collection, 918, I believe. So it's QQL is the name of the collection. You guys can check it out on OpenSea. But this collection was minted at I believe 15 ETH a piece. Yeah, correct me if I'm wrong, but I believe it's 15 ETH a piece. So doing the quick math in my head, 918, 15 ETH, 13,770. So there was 13,770 ETH in a day on that mint. And I believe it minted out in like minutes, I believe. I know it was within 30 minutes, but it minted out in minutes at 13,770 ETH, which at the price of ETH at the time, you were looking at something like 17, almost $18 million in a single drop there. So let's get some thoughts about that in this market, in this atmosphere. What do you think what was the thought process behind that? And are you guys surprised that we had such a quick sellout on such an expensive, NFT collection? Let's start with you this time, Cyan. So what do you think about a 15 ETH, almost 1,000 collection selling out in minutes in this atmosphere, with 98% down in the market. Like,
I mean, I have questions because I guess I don't know. I don't know what this. I don't know what the value proposition is to really comment on whether I think it's like worth it or not. But that's fine. I don't really need to comment on that. But it is because it's still just an interesting thing nonetheless. I mean, I think it is a weird dynamic because you have these situations where it seems like it would be the worst time to try to launch a project, right? But sometimes it's basically like a gamble, I think. In fact, I was just reading a book about the founding of PayPal, and it was really interesting because they started in like 1997, 98-ish, and then so they experienced a dot-com bubble, and they hadn't IPO'd yet, and they were trying to decide what to do. They were like, they needed to raise funds, but like it was completely toxic to try to IPO. It was like 2002, like 2003, and like nobody wanted to talk. Like it was like tech was like, or software companies and all this stuff were just like looked at, like everyone hated them. It's like, it's exactly how people talk about crypto now is how they were talking about internet companies. And but what they did was they just made this like calculated risk of like, well, you know what? It's toxic to IPO right now. So therefore no one's IPOing. If we IPO, then people there's actually like available attention span. People will know that we're IPOing. We'll be the only one that's being talked about IPOing. And yes, some of that will be negative and people disliking it, but it's like the field is clear and you can kind of go in there and take advantage of that. And it's a gamble because like if PayPal didn't have the goods, then it's a bigger risk and it messes up. So it can go either direction. But I think if you are confident in what you have and there's like a real value there, you can actually take advantage of these situations and outperform anyone's expectations. So it seems like that's what's happening here.
Yeah, and my thoughts are exactly the same on that. I think that if you are a solidified collection right now, it could be very beneficial because you might be the only collection that's being talked about, and that's exactly what happened with QQL. They're literally for the last week and a half, they're the only collection that's been talked about, right? And so they're not competing with a lot. And just I'll give you a 30-second breakdown. So. There is no value prop behind QQL. It's a generative art piece, right? Okay. So, but Tyler Hobbs was so Art Blocks is arguably the most famous generative art collection in existence, right? Now, before they started mass producing, when they did their limited collections, the Fidenzas were the most limited collection ever done. From Art Blocks. And so they've been the most expensive traded collection. So it's literally just generative art. But because it was tied to the secondary collection from Tyler Hobbs, the Fidenza, which those things are still, I still think they're trading at super high valuations. I know at one point in time they were trading, above higher than like CryptoPunks or Bored Apes were, like hundreds of ETH. There was one purchase for over 1,000 ETH at one point, a while back. And there's probably bigger ones than that. I know they did it with Christie's auctions and a bunch of stuff like that. But yeah, it's a utility-less. If that's even a word thing. It's like it is without utility thus far. I mean, I guess he could drop some utility there at some point. But I think that's interesting. I think that's making the argument that this specific thing, specifically like AI generated art, and like algorithmically generated art, it has this place in Web3, and that I guess, I mean, we're showing that it's solidified itself because even in this terrible market, we're still seeing people jump to purchase these things. So it's very interesting to me. Nate, you got any thoughts on Tyler Hobbs or generative art or anything like that? Nate's a contrarian. He's gonna be like, man, I don't understand this bullshit. I'd pay $50 for that. Like,
no, I get it. It's not for me. Like, I would never pay for that just because I'm not about the art collective thing. Like, I mean, Kenny, like I'm all about the utility side of it. Like, to me, if you're going to pay that much money for something, like get your use case out of it. Like this is not a 1-for-1 piece of art that you can quote unquote hang on your wall. You can, but so can 10,000 other people, if they really wanted to. So it's a little different than you hanging like a Picasso or something, in a gallery. It's just different. But to other people's standard, they value that. And that's where the value prop really is. It's do you value it versus the next person? I personally don't. I don't think it's worth, $1,000 personally, but that's just my value prop for it. But I do see the value and why it's getting the volume and why it minted out the way it does. One, it's a small collection. And in this market, like you can imagine, everybody's a piranha right now, right? They're trying to find value wherever they can. Even if there's no utility case there, people want something that's going to produce financial results for them. But here's a statistic for you, and this is why it's good to understand the analytics behind something. So if you will look at the on-chain value, and I use an Alpha Shark, I don't know what everybody else uses, but Alpha Sharks has a real cool feature that tells me the next Bored Ape Yacht Club potential. And what it does is it factors in a percentage and an algorithm. It cross-references all the wallets holding like a Bored Ape Yacht Club among all the other collections that those hold, and it gives you a percentage based off how strong of a diamond-handed holders, let's say, like that's all in case and purpose is what it is, what the potential is, right? So on this collection itself, there's a 50% chance that it's a Bored Ape Yacht Club potential. What that means is that everybody that's a Bored Ape Yacht Club holder and holding all these other super strong, just ultra floor plays, right? They're holding this.
Yeah.
And what that tells you is when you start looking at it, for somebody like me, even if I didn't see the value prop there, I see the value prop that other people see that value prop. And to me, that's where you justified. So if I was ever going to bet on a horse, I'm going to bet on the one that other people that have successful collections are going to back. And that's why that stuff is super successful. But right now, everybody's piranha. They're looking for, you know, the volume and stuff, but it's a low supply collection. It's kind of the hot topic in the world right now. And to be honest, it's kind of actually refreshing, even if I'm not going to buy one. It's refreshing to finally get out of that free mint degen bullshit meta. And now you're going back into quality projects. I'm not saying that it has a utility behind it, but there's a solid name behind it with solid traction that everybody else sees.
And it has history, right? It's not like you're a new kid on the block because, you know, Tyler Hobbs has been around forever. Art blocks started minting before, you know, Bored Apes did. So, you know, it does have a very solid history in the crypto space. That's why I was telling people, you know, a few months ago, and guys, once to make this statement here, anything that we talk about purchasing, this is not financial advice. We are individual traders. None of us are, you know, there is no chance that we are registered financial advisors in your area. I am in my area, but it's one state in the U.S., so I'm not here to tell you what to do financially. But these are all personal opinions, so please take this with a grain of salt. But however, in Alpha Mutants, I was having a talk a while back about the prices of some of the early art blocks collections, and the first art blocks collection that came out was Squiggles, which was the first generative collection that they dropped. So it has a great amount of historic value. Like this is pre most of the huge collections now. This is pre-proof. This is pre-Bored Apes. This is pre all this stuff. And their price, in my opinion, was looking halfway juicy at that point because they had taken, I do believe that historical NFTs, I am a personal believer that certain historical NFTs are going to have value every time there's a bull run because people are going to be buying into them. So things like, I'm also a believer in curio cards. I think that curio cards are going to have their time in the sun at some point. I think that early generative art will, you know, amongst other older NFT collections. I'm a strong believer that CryptoPunks' value will be maintained over a long period of time. So take that with a grain of salt. But we are in the beginning phases here. You know, it's akin to the fact that, you know, people that collect, you know, old cards or old game systems, the older and the smaller the collections were, you know, you find value in those things. And it's no different when you're talking about art or early, you know, PFP collections inside the Ethereum blockchain. So good thoughts, guys. Good thoughts. I thought that was a real interesting topic to talk about because you don't see a whole lot of collections blowing up like that. So let's move on quickly to another story that I found very interesting. So I've seen several stories this week, specifically out of Latin America, that crypto loans are booming in a lot of these countries that are experiencing rampant inflation currently. So I'll actually read you guys the header here for this particular story. This one says crypto loans are booming in Latin America amid runaway bank rates and inflation. The traditional banking system and economic instability are making it difficult for Latin Americans to get credit. But crypto lending is thriving across the region. So let's talk about this a second, guys. Let's talk about and this is getting kind of deep into like macroeconomics right now, because we all know that we have a dollar that is, you know, just booming right now. And we see rampant inflation in, you know, multiple countries and economies across the world. We see value assets crashing and burning everywhere. And you know, interest rates flying through the roof. We're at almost 7% home loan interest rates here in the U.S. I mean, it's just insane. They're breaking records everywhere in a bad way. So what do you guys feel like? And maybe it's not even loans and being able to get loans and credit right now, but it's starting to look very appealing to go out. I mean, if you're in need of a loan in Web3, it's starting to look much more appealing to go use the mechanisms available in Web3 to get a loan at a 50% lower interest rate than what are currently available in a lot of these countries and currently. So what are your thoughts on that? Like, I mean, what are your thoughts on, and I don't know how deep you are into economics, Cyan, but I do know that you have your head to the pulse of Web3, and we've actually talked about economies inside of gaming and stuff. But what do you guys see happening with the financial use cases in Web3? During these terrible like world economic times, because I mean, we obviously have a ways to go with this. We've got the recovery time on this could be months, could be years. There's some large banks calling for like a 10-year prolonged period of instability in the financial systems. So do you guys see that as a good thing for Web3 and cryptocurrency? Is it a dangerous thing? Like, what's your personal thoughts on that? Because I think it's very
10 years. Is that a good thing? 10 years?
No.
Oh,
Obviously,
okay.
a 10-year bear market would be very bad. Okay,
I was like, that's a pretty straightforward answer to me.
Well, let's put it this way. I mean, could it be good? Because I think I see what you're saying. Okay, if we have 10 years of prolonged problems in the macro economy, which I definitely think is a legitimate possibility, that could expose the issues with the current financial system, which therefore gives crypto more of a use case, which is what we're talking about here. So then for Web3, it could in a weird way be good in the long term, even though it's going to feel the pain just as much, if not more, in the short term because of its idea of being a risk asset. It's like there's two different classes that people are operating under. Like, the people like us look at it as like this long-term investment in like a future technology that will provide value to the world. Whereas like people from the outside will just look at it as like the highest risk asset on the risk curve. And therefore, like, if anything's going wrong, that's the first thing they sell. So anyway, I think I understand the paradox there, but I don't know if you want to. I have some additional thoughts, but I want to let Nate jump in if you got any thoughts on that.
Yeah, I mean, to address that first part. So in my opinion, even if it was 10 years, like the problem with it is the only thing that's going to really, in my opinion, bring crypto mainstream to where people actually want to use it is adoption. The only way that happens is with proper regulation. Like, companies won't enter the space, and it's kind of the same reason why the regulation has taken so long to do now is because it hasn't been lucrative. If we have a 10-year bear market, no company is going to want to be going into a speculative asset in crypto. So that just kind of kicks the can of regulation down the road, which does, there is a use case where you can say, okay, well, people will kind of flock to crypto. It's not going to be the big players. It's not going to be the people with true money back. It's going to be countries who truly need it. Right. And the US is unfortunately not one of those right now. And I don't think it will be for the foreseeable future. The only reason that Congress and everything in the Senate was actually looking at regulating that stuff is because it was getting to a point where so many players were entering the space that it kind of got to threaten the dollar in a sense. Right. But so the time for that being, like, I kind of disagree with that opinion a little bit, but I do see the value in it. The problem that I have with, the way it is working is, if you look at it, is that if you look at some countries, there's some select countries in the world where they actually charge you to keep money in a bank, right? We do to a certain degree, but it's not nearly as bad as some of these other countries. The difference, I think, with the interest rates and the loans within crypto is, yeah, they're significantly more favorable, right? But I'll give everybody an example. I need to buy a house, right? I don't live in a house. I live in downtown in an apartment complex, and for me, it works because like 5 minutes to work, but in order for me to go get a home loan, right, I'd have to put up a substantial amount of capital in crypto to get a loan of that equal size. Now, yes, the interest rate would be significantly better, but you still have to back it with something. Whereas like right now, I could walk into a bank, I could put, $20,000 down on a home, and I could have a loan 10 times the value if I wanted to, based off my credit and everything. And you can't do that in crypto. Most people can't do that in crypto. So I think there's a caveat there that most people have to understand. But when you're talking small loans, oh yeah, it makes 10 times more sense to go into crypto right now.
Mhm.
I mean, just does. And you're the number one thing is you're fighting by being in crypto, you have a deflationary asset, right? So you're not fighting the interest rate spikes that you are right now. Even if you go get a loan out right now, I mean, the dollar, how much has it deflated this year, right?
Yeah. Well,
mean-
you have, and it's a dual battle too, because you also have to look like with small loans. I absolutely agree with you because, like, I mean, credit card interest rates have went up, massively in the last 18 months, and that, anyone that's being forced to use credit card debt right now is just they're killing themselves slowly because of the high interest rates. I think the interesting thing with crypto is that in DeFi, it's a very straightforward proposition, right? It's like if you have something of value, we will give you this much of the value, and that's it, right? It's so much more complicated when we talk about our normal financial system of credit because there's other factors. There's your history of credit finance. There's fluctuating interest rates. There's all these different types of things. So I think it's much more straightforward. I have an interesting view on this subject because in the macro, and macro is my life to some extent because I'm always looking at it. So and this is not a well talked about opinion, but in my opinion, and this is a prophetic thing. I'm glad this is going to be at YouTube because if this happens like this, I'm going to look like some sort of crypto guru god that saw all this. If not, I'm going to delete this
Be like
video,
everybody
right?
else.
Yeah. If it doesn't come true, I'm deleting this video.
Yeah.
But I see potentially, and I don't think there's a large chance of this happening, but I do see a potential future where all of this implodes upon itself as far as the traditional financial system. I think that debt could become so rampant and inflation so bad with no way for countries to safely fight a recession that we could have like a very prolonged, terrible period akin to like the Great Depression. As far as scope, not obviously in the financial situation that brought it about, but I think in that scenario, what I see these assets that have had money pumped into them for decades, like the traditional stock market, like equities, these types of things. I see those things correcting, 40 years of terrible physical policy. The interesting thing is crypto doesn't have 40 years of terrible policy. The correction that we see now is a correction based off of FOMO, right? Of this hype cycle, but there is no injected, money that didn't exist going into these things. There is no government grants. There is no years and years of stimulus being pumped into this stuff. So I think that the correction eventually, if it becomes a very prolonged thing, eventually crypto is going to correct before anything else does, because it's going to reach true value before the rest of the markets in that scenario. So is there a potential future where 3 years down the road, the stock market is still reeling and the housing market has crashed and we're looking at inflation of hundreds of % a year? There's a possibility that happens, because as much as we want to talk about our government not letting things like that happen, I mean, the Roman government didn't want to let that happen either. I mean, the Japanese government didn't want to let that happen either, but it happens sometimes. Sometimes it goes beyond the control of a government to stop, right? So I think there is a potential for that. But
Sorry,
go ahead,
sorry.
Syed. Yeah, go ahead.
No, I was just gonna say, I mean, especially in this case, because the inflation is honestly way more than the problem of the stimulus. Like the inflation is because of a lack of like energy productivity and just like global productivity, right? You can't change that with a government decision. You can't decide, you can't snap your fingers and produce more energy that lowers cost of things. But you can produce some more energy, but you can't fix the problem. And they seem to be doing everything the opposite of what they should be doing, where they're constantly making energy scarcity like worse. So yeah, and what you're describing there is like kind of maybe there's an analogy to our previous topic where like, yeah, okay, so let's say we're 4 years into this, and I think a lot of consensus seems to be that, yeah, maybe how much lower will it go? Who knows? But you could have many years of just like stagflation, right? Yeah. So let's say everything's bad, and then crypto actually does bottom out earlier or find that true value earlier, and then therefore it can start to grow and real economic value can start to be produced, well, then you're in a situation where it can be one of the few things that's actually like going up while everything's going down. And then, so that's what I mean when I say like, in a way it could be good.
Yeah.
But to your point about the regulation, because I largely agree with that, because you need the commerce to come in. So let's put that aside. Let's say we get the regulatory stuff that we need over the next couple of years, which is not a given, but like, let's say we do,
Yeah.
Then you still need that adoption. And I think it's these countries that don't have exactly this news article is about, like these countries that don't have these other options and the people don't have other options, they'll be the ones that kind of can fuel that rise, because it'll actually be solving a problem really directly for them. And, if we talk about the gaming things and stuff like that, it's like, if they can make $20 a day, playing, like adding value to this ecosystem, playing this game and doing this, then that will encourage a lot more participation too. So by no means is any of what I just said definitely going to happen, but that is absolutely a scenario that I think about too. Like how could these things play out?
Well, and I go ahead, Nate, you go.
Oh, I was going to say, like, it definitely could, and I think the one thing that, regulation has to come. Unfortunately, like the US economy, like the way everybody looks to us to make the regulation standards, because we have been the most secure, one, we're one of the biggest powers, but two, we're the most secure dollar, currency in the world. So obviously when most of the world transacts in that, like it matters. Unfortunately, that means that, our regulation is much slower to adopt, especially when the people behind it are much slower to grasp the concept or believe in it, or, I understand the concerns, the fighting the US dollar. They don't want to deprop the dollar. I mean, that's the whole thing. But if you look back to Facebook's, proposition of, I can't remember the official name of what it was a few years ago, but
Libra,
they had
Libra.
Yeah, Libra, where they had a basket of stable coins. Like, if you're really trying to go towards the idea of a whole world sovereignty, right? A basket of coins that regulate one another balances the economy. Right now, if our dollar crashes, it's the same thing. If Ethereum crashes when they were doing the upgrade, how many projects and how many companies would that have just decimated? Yeah. And that's what's happening right now. Whereas, like, if you have a basket of coins, or if you have a basket of things that are propping up one another, it's the same thing with an index, right? Why do people put their money in indexes? Because they're more stable. If a company goes down, it doesn't wreck the whole value of the index. Yeah. So why we don't apply those same kind of concepts to just traditional real world scenarios like crypto, I don't get personally, but I think that's part of the generational mindset. And I think as you have the baby boomers kind of die off and leave kind of, regulation, you're going to start to see more and more crypto change happen faster. It's bound to happen. I mean, majority of people, they've done studies, majority of people right now are younger individuals transacting on the network. I mean, it just is.
Yeah. I mean, yeah, I definitely agree with that. I also think it's interesting. I would be a slight contrarian to the fact that I think that regulation has to happen, because I'll throw this out there to you. I think there are scenarios where, in it, like if you look through history, sometimes innovation is not regulated and brought on. Sometimes it's forced, right? Yep. So I think that if the United States and some other larger powers, that be like, like some European countries and Russia, and China, I think if some of these countries drop the ball and don't do this in a timely manner, there is a potential where this, I mean, because this technology is going to come regardless, right? And I think in that scenario, I think what we'll see, and it's kind of what we're starting to see now, is countries like South American countries that they're adopting this shit regardless of whether their governments do or not, right? Because the use case is there. And if you have to think, if during a prolonged like recession, right, if you're trying to make some money or companies are trying to expand, what does it make sense to do? Does it make sense to spend tons of money on physical goods and infrastructure and all this kind of stuff? Or does it make more sense to bring your products into the digital realm in some way where it costs 1/10 of what it does in the physical realm to bring these things to market? I mean, I mean, you have to think, man, there's businessmen like myself sitting out here and it's being like, man, do I open an in real life business, or do I find some way to bring my business into the metaverse? Do I find some way to digitize this business? because the future looks brighter, but the cost, I mean, it's the cost, man, because you can put most of this stuff on chain to where it cuts out so many middlemen and it cuts out so many products that you have to have. So I think that, always being the contrarian, I think that, I do think that there will be regulation in a timely manner and that will bring on the masses. But I do think that there's a chance that's above zero that countries fumble that shit and we see the adoption that on chain. Bitcoin is unregulatable. Like at this point, there's no way to regulate it. And eventually a lot of Web3 protocols are going to be unregulatable. There's going to be things that are going to be happening on top of those things. But that's just my contrarian view. I like to throw some contrarian views out there. But let's jump off this one because we've been along on this topic and we're running to the end of the thing here. So the last big thing I wanted to do, it's actually several stories, but it involves one man, my boy Sam Bankman-Fried. Dude, if you're ever watching this, hit me up. I'd love to have a conversation. But anyway, so I think that Sam Bankman-Fried is solidifying himself as this godfather / I'm going to single-handedly save crypto if I have to, individual. And I think that his actions are very telling for his own moral compass in this, because he's made enough money at this point where he could just walk away during this bad market and be like, man, I'm done. I'll go live in Fiji for the rest of my life with models all over me. But he's not. And in the last couple of weeks, we've got stories like this. So I'll just rapid fire these. So we have FTX wins auction to acquire Voyager digital assets with $1.5 billion bid. Sam Bankman-Fried, it just became the third largest Robinhood shareholder, and the stock jumps 26%. There's a story that came out today that Sam Bankman-Fried was in talks with Elon Musk's people to potentially, go in with Elon Musk to purchase Twitter. Okay, and then there's it hasn't been verified yet, but Sam Bankman-Fried's also in talks with Celsius to purchase Celsius and on that platform. He's also given out multi-millions of dollars in loans, these flash loans to different protocols to keep them afloat, right? During this period, DeFi protocols and things like that have suffered pretty bad. So what are your guys' thoughts on FTX, Sam Bankman? I did a video, a short video on one of the platforms. I can't even remember at this point in time. I think I may have done one here on YouTube. It may have been on TikTok, but I did a video talking about some coins that I was looking to DCA into in the coming months, and the only exchange that I was on there was FTT or FTX, because I think that the moves that Sam Bankman is doing in crypto and then purchasing companies outside of crypto to help them integrate more with Web3 is fantastic. So do you guys have any thoughts on those stories or what's going on? Because that's a lot of money moving hands and a lot of companies being bought up in a very short time frame.
So yeah, that's it is really interesting. Like I think of it, man, I'm wondering, yeah, it's like such a big play, and assuming that we're all right, and the crypto space recovers and thrives at some point. I mean, these are like the types of moves that are going to look like just unreal genius, because he's like consolidating the market. So these are just like potentially very ballsy but good, like capitalistic moves, if you will, taking advantage of just like the panic in the markets and kind of scooping up a bunch of like long-term good assets and create like this crypto conglomerate powerhouse, the Google or something of the Web3. So I'm very intrigued about it from like just that point of view. And I think getting the partnerships with Web2 and like getting those partners involved, I mean, it is what you'd like to see, right? So assuming that he's a good guy to be captaining such a large ship that will inevitably be, which I don't know enough about him, but based on how much you seem to like him, I feel pretty good.
Well, Kenny likes me too.
Yeah. Dude, who knows? I like a lot of people. But I will say this to that point. So I think the most interesting thing out of all that, which I have to give hats off to the guy rescuing Voyager. I have to give hats off for him putting bids in for Celsius and the loans he's put out and everything. I have to give hats off to the guy because he believes in blockchain, obviously. But I think the most interesting thing is his massive purchase and being the number one holder in Robinhood. I think that's interesting because if you've seen Robinhood has been like massively going into crypto, like strong, because if you look, I think it was a year ago, you could start purchasing Bitcoin on Robinhood, but that was it, right? You can purchase some Bitcoin, that was it. And now they've got like a dozen crypto assets you can purchase. You can now move stable coins. They have their own crypto wallet that you can, have custody of. It's a lot of big moves for Robinhood is basically the application that made investing sexy, right? Like, because
just to jump in here because it's so relevant is like they've been Bitcoin, like Robinhood was the first platform that I bought Bitcoin on. And this is all the way back in 2018. So they have had Bitcoin, but it's obviously like you weren't able to like transfer it out and stuff, but you were like buying it to trade. And but at that point, I hadn't been into crypto, but I was on Robinhood because I was like a retail investor in like these tech stocks that I liked, right? And so I think it's a very good point, and I'm glad you like re-brought that up because it's like how do you plug in, like what's your total addressable market, and how do you plug into where they already are? And like getting Robinhood and getting that, and if you can build like this perfect funnel from Robinhood into the rest of Web3, well, now you're cooking because you already have so many people on that platform. So I like it.
Yeah, for sure. And that's exactly my point, was that if there's ever going to be an investor bridge into cryptocurrency, I mean, what better bridge than Robinhood, right? Because like the millennials that people our age, like that's what most of us started investing in, was these self-investing apps like Robinhood or Webull or some of these things. So I think that is the biggest factor out of what's being done lately. So that's pretty fantastic. Nate, what are your thoughts?
No, I fully agree with everything you guys said. I think I'm a little against Robinhood and that kind of stuff now, because the whole back to the saying, like, if you're not paying for it, you are the product, right? I mean, your data is being sold and all that shit, which it's a gray area when it comes to like stocks and how you're being traded, like first in, first out order stuff. But we won't go into that. My point is that, but what you can't argue is that if you look at everything that they're buying, it works, right? From Robinhood has the biggest user base of any broker platform in existence, right? They just do. Why? Because it's free, because people want to use it. It's simple and it's easy, right? Yep. That is exactly what people want. Celsius, same thing. Celsius worked. They just had poor management when it came to it, but it's revolutionary. And when you can funnel all those things, and those are different sectors that they haven't brought on, right? So FTX is a trading platform for cryptocurrency, right? FTX works within the Web3 world. Robinhood works within the Web2 world. And then when you bring in, loans and shit with that, and yielding and DeFi, like you're tying all of those ecosystems together. So they're trying to build a powerhouse. And if you look at what I shit myself in the foot for saying this, but I was around when Binance did their ICO. I passed on it. Like I could have got in at like 8 cents a coin or some shit like that.
God,
and I passed,
painful.
man. Yeah, it is. But part of it too was that, when they were coming up, there were only a handful of exchanges that were good. Binance wasn't one of them. It was doing better, but it was still, it was still one of those Chinese exchanges that still, you were shady. And back in the day, like it was one of those things. Binance really got their shit together, and you see where their tipping point really happened, where it just like exponential curve. It's when they really started, onboarding new products and like exploring new markets. Some of the non-regulation rally, I think, helped them. But take it from somebody who, I can't use Binance right now, partly one, because I'm a US citizen. And so I'd have to KYC, but two, Binance, my state is one of the 5 states that Binance doesn't currently support. So I still can't even use that shit. So, but my point is you feel it when the rest of the market, you can log on to one platform and you have access to like you literally wouldn't have to leave Binance unless you're really trading something just so far out there that, is probably poor risk anyways, right? Or poor reward, So I think when it comes to it, it's like you want those powerhouse exchanges that are really pushing the envelope. And for everything Coinbase is, and I still use Coinbase to this day because it's simple and it's easy and it works. But I think for everything that Coinbase promised to be and is and how great it is, FTX is going to be 10 times better. They just understand the market. They're expanding faster. You know, things are just, it's better, you know, and that's what
Yeah.
you want is you need a true competitor to Binance. Cause honestly, Binance has become a conglomerate.
Yeah.
And you see what happens when Mt. Gox steps in to conglomerates.
Yep. Yeah, for sure. And I honestly think that this has been, I've done massive amounts of research into Sam Bankman. I one time I'll get on here and we'll talk about, some of the big crypto players and their stories, but the way that he came up in the space is just brilliant and fantastical. But I will make a prediction here that within that sometime in the next 10 years that Sam Bankman-Fried will be the richest person in existence. That's going to happen. He's valued at like 25 billion right now or something like that. But
it's a bold claim, Cotton.
Yeah, listen, I feel it in my nuggets.
Yeah.
So, but one other thing, this is a very important thing too. So because you, Cyan, just mentioned a little while ago that you were reading a book about PayPal. You got a picture of Elon Musk behind you there. So I have a very important question for you. Is Elon Musk Satoshi Nakamoto? I need
Dude,
to
I
know.
don't even know if he's a
No,
human
Craig
being.
Wright is, man. Come on. It's already been solved.
Oh, that's funny, man. That's
Right,
funny. All right, so well that covers up. We're at about 10 minutes until the end of our time frame here. I like to keep these about around an hour. So let's talk about what you guys think of big stories that you think we should look at in the space. Like any stories coming in lately. Okay, so for the last 10 minutes or so, because we got about 10 minutes left, I think we do like a session where we just talk about a story that you guys have found interesting or like viable that in the space lately. So to start this off, let's go ahead and let's start with you, Nate. Let's start with anything that's because Nate's always the one to be like, oh, come to me last so I can talk about everybody else's.
Yeah.
So what's been going on? I mean, what have you found the last couple of weeks? Because there's just been a plethora, man. Like literally coming through into this thing, I read through 100 stories that all seemed like really that had effects across the market. So I just picked the few that looked the biggest. But man, I mean, there's crazy stuff going on with crypto and NFTs, and right now, then just the whole markets to begin with. But what do you find interesting? What's really caught your eye in the last couple of weeks?
Man, it's gonna be bad because we've been so busy building shit that I haven't even paid a lot of attention to that stuff. Yeah. I will say that the few things I am watching really heavily right now, and it's going to be bad because it's not necessarily Web3 related. I'm watching the markets, and the economy. I mean, if you're not right now, God help you, because everything you do is affected upon that, And so I think that because right now, like, the way that I trade and the way that I operate and stuff, like the market is cycles and you have to adjust to those cycles. There was a time where NFTs were super lucrative to trade. Now NFTs are not. I've minted a few things here and there, but my minting numbers have gone down like 90% because nothing's just lucrative enough for me to do it. And so right now I've actually done more coin trading, large cap coins. I'm not going to trade small caps, especially right now, because that's just recipe for disaster. But I've done short in and out trades in a few days times. But as far as like news goes, man, I haven't really followed anything. The one stuff that I will outside of like the world economy news, just all over the place, that I am watching is some of these layer 2 exchange airdrops coming up. Anybody sleeping on that stuff, you don't like money, because historically, if you go back to like Uniswap and you go back to like Optimism, all this other shit, those have been massively thousands and thousands of dollars for an hour's worth of work.
Yeah.
So I would highly recommend anybody go out there and do the Arbitrum airdrop stuff right now. ZK Sync just announced that they're going to have a governance token on their platform. We still don't know the requirements on that, but interact with everything you can do because it'll pay off tenfold. Those are the things that I'm really focusing my time on right now, is just finding that value. Because really the best thing that you can do right now in this market, like, you don't grind for whitelist. You don't grind for, all these other projects and shit like that. You want to maximize your time. Your time is time is the worst thing you can have, because people take advantage of it. Right. And that's just, if you can get the most reward for that time, that's where you want to focus. And right now, if somebody paid me $1,000 for half an hour's worth of work, I'll take that every day. You know what I mean? And
Right.
you set it and forget it. And to me, that's that's the news I'm following right now. It's just where those potentials are. Now, obviously, there's a few like there's news like the FTX stuff and all that coming out, and I'm reading it, but my focus is on the world markets.
So, yep, sounds. I think that's solid advice. I think that everyone, even those people that through the bear market were saying, oh, the macro doesn't affect crypto and stuff. All those guys are looking like fools now because obviously, and I see the smirks, but there was a lot of people saying stuff like that, like, oh no, macro doesn't affect crypto and like all this nonsense. And it's like, man, the macro affects everything. The government, the situation, the economic situation affects absolutely everything because it's all tied together, right? So
let me go back to this. So how you were talking about Fidenza and the QQL or whatever, right? All that money coming in, that's not money. That's not fresh capital coming into the market for the most part. That's all being recycled. And so that's where I go back to say, if you're watching all of this stuff, thinking that, hey, we're actually making progress and stuff. No, we're not. It's just money, rotating hands right now. But where the real potential, where that real bulk market's going to start to turn. And, Kenny, this is the $1 million question you and I are trying to find right now is where's the bottom? Right? Where are you going to start to see that reversal? Because that's the point where you really want to be paying attention.
Yep. That's going to be the millionaire maker right there to whoever can successfully find where this bottoms out and dump the capital in at that point. Like that's going to be, generational wealth made for those people that time that properly. So yeah, I agree with you. So that was pretty dark there.
Pretty
Nate.
vague.
Yeah.
Well, I don't have news, man.
No. I mean, no, it wasn't vague. It's good advice. It's just kind of dark and gloomy. There's not a whole lot. You can get right now. You better be digging into the back alleys and crypto. No, I mean it's true. It's true though. I mean, I picked up over 10 grand in a single wallet on airdrops before. So I'll echo that to him 100 times. Like you can buy a car, you can have a house down payment for airdrops sometimes. So definitely be looking at those things. But Cyan, give us something else. What are you interested in right now? Like
ironically, to balance that out, there's actually an NFT collection and it's called the Hopefuls, but this is the NFT collection of a new game studio called Azra Games. I don't know if you guys have heard of it.
Oh, I had whitelist. I missed it, man.
Yeah, it's good. Ooh. Nate's been complaining about that for like days now. He had whitelist and he actually missed it because he's working all the time. Like
I had to hop in a meeting. I had it. I was like right at the second tier of the whitelist, and it sold out. And I was like, what the fuck? And then I'll pick one up in public, and public was gone in like 2 minutes or something.
Yeah. Public, I had whitelist as well. But yeah, like I looked into, I was doing research into it. I made a video on it, and in doing so, like I had to just do a lot of research, and I was like actually blown away with like the potential there, because basically their founder, Mark Otero, he actually in 2009 started his first game studio called Click Nation right after the .com burst too. So it was like really tough time economically, but in 4 months they released their first game and it was like immediately successful. They released like 3 or 4 more mobile games, and then they were bought by EA. So like every one of his games has been successful. They were bought by EA, and then his team at EA went on to create Star Wars Galaxy of Heroes, which is like a mobile game that's brought in like $1.5 billion of revenue. So this is just a serial game successful like game developer. He knows what's like a fun game. And it's mobile. And very much like economically focused and like these big universes. So it's just like I'm just a huge, like I put so much weight in the person's prior experience. Mean, you like forget your white paper, forget all your stupid this, that, the other. Like if you've gone out there and built a company, built like 10, this is going to be his 9th like RPG, like mobile collectible kind of RPG game in mobile. So it's just like, okay, he has the experience, he has unbelievable success. If he created a $1.5 billion game in Web 2, think about what a successful game in Web 3 could be.
Yeah.
And I like the team is really good. It has, I'm starting to get a little bit more like away from, oh, they're backed by these guys, because it's like, that doesn't mean everything.
There was a lot of people backed by 3 arrows, man. Like there's a lot of people backed by 3 arrows.
Exactly. I put almost all this weight is in the experience, like the experience that he has, and it's like, okay, what's the likelihood that this guy fails now and his whole team fails now? Doesn't seem likely, but he also they're backed by like Andreessen Horowitz, which obviously like one of the probably the biggest like tech funds. So yeah, just like a lot of good stuff there. The hopefuls, it was a free mint, which like I actually do like in these scenarios. I like that it's a free mint because it tells me they're not trying to just raise funds and get out of here. Like if they were just trying to get money and get out, you would charge for the thing. So I do like that. And they're already trading the floors at like 0.3. So from a free mint to 0.3 is not bad.
Nice.
Yeah. So I would just say if anybody's into like gaming and they kind of want to just, be a little bit ahead of the curve and kind of look into this project and see what they're working on before they actually release it, so you can kind of like be ahead of it. The game, their first game that they've been teasing is called Legions and Legends. And I'm not sure when it'll come out or anything. They only started this studio in early 2022. So it's like a new studio, but they've been teasing the game that they're working on. And it's just something I'm going to be following really closely because I mean, I believe that, as we talked about, I believe that gaming will kind of be one of the big things that like, I heard on a podcast, like the other day, someone referred to the Google in like 2004 as having cracked the nut on how to monetize the internet. And I never thought about it like that because I was so young at the time, but it's like, there was a time where like, no one really knew, like, how do I monetize this shit? And like Google they figured out like, oh, we'll give all this stuff out for free, but we'll collect data and then we monetize it and boom. Okay. Here we have this whole new industry. Right. And so it's like, I think gaming could be the thing, like a gaming studio, a gaming project, whatever it is, could be the thing that cracks the nut on, oh, this is how we really bring the adoption into Web3. Right. So I'm always looking for those projects, and that's a good one that I've kind of like recently stumbled onto that I think people should look at. Called the Hopefuls is the NFTs.
Put me down over here, man.
Yeah.
Get in on that.
Yeah, that's awesome. And I think it's good that, even with all of the rampant macro issues, and there are some, the majority of the stories right now in crypto are negative, right? I think that the people that are looking for these positive stories in crypto and getting involved with these positive projects, protocols, people, I think that gives you a good head start on when these things, eventually turn around, which they always do. So I think that's awesome. And for me myself, what I have been looking at recently, and I'll do this in like 2 minutes. What I've been looking at recently is kind of akin to what Siam was saying. I've been looking at where the money's going. Is there any money that's going inside of Web3 currently? And the truth is that as far as user base, we're recycling funds, right? It's being recycled. But from Web2, investment is still coming in. And what is investment coming in right now? I'll tell you, investment is coming into media. It's coming into gaming. It's coming into blockchain related streaming services. It's coming into those type of protocols. I mean, we see these things like GameStop doing contracts with Polygon for this type of stuff. We hear that Netflix is in talks with several platforms on building out their blockchain presence there. We see gaming studios in talks with like Web3 gaming developers, things like this. So I think that watching where the money's going is very important right now. And I think that the biggest things I take away from this is, money isn't going into, building new exchanges or into ICO and coins and stuff right now. Money is going into media projects and into some DeFi applications, right? Specifically DeFi applications that are based outside the US, because right now the US isn't feeling it as bad as everybody else, but I promise you, everyone else is feeling it. So these DeFi applications may in the next year or two really play a big part in global economics. So I encourage you guys to be looking at those things. Don't just take things at face value. Look at who's behind them. Look at where the money's going. Look at where the big players are going. And make your moves with that in mind. But anyway, we're at the end of the
Let me
show.
build on that real quick because it'll be
go ahead.
super interesting. For anybody who doesn't know, Cyberpunk, like big game, right? They had a large user base when they first came out, and that kind of died off because of bugs and all that. Cyberpunk actually just came out with their Edge Runners series for Netflix. Due to that, they've actually, this is the only time since they launched that they have the user base count that they did right at launch. And so my point is it goes to show you that when you get into the mainstream things, like even the people who weren't big on the game or didn't play it, right? It revitalizes and it brings new users on board just because there's something to get excited about. And all what you need is somebody to really just dip their toes in this space, right? To get hooked. I mean, that's how most of us did, you know? And I mean, it's a bonfire from there. So you just need that.
100%. There will be some big events of that nature that happen, and that's what's going to. I mean, in my belief is that's going to kick off the next round of like really upwards bearish movement in the marketplace. So, but anyway, guys. So hopefully you guys enjoyed the updates, the different takes and opinions on the news this week. You know, if you guys like this type of segment where we talk about these things, kind of break it down for you, leave a comment below, like, subscribe, follow. I'll leave everyone's links down below. So, you know, any final words, guys? Anybody want to outro this thing before we're done?
No, man, I've said my piece.
Yeah,
okay.
That's good.
All right. So until next time, guys, I'm of course Crypto Kenny. We have Nate, we have Cyan. Follow our projects, follow what we're working on. Check us out. Financial advice, but we've been in the space a while. There's a lot of knowledge you can get from not only just ourselves but our projects. Come check them out. Come follow us on Twitter. Come look at these things. We announce a lot of these things. You would have been following Cyan, you might have known about the hopefuls before it actually dropped. You know, if you would have been following, well, with Nate's just out there building, so you may not have known about it. But you know, we try to put these things out there before they're like well known in the markets and stuff. So we'll try to help you guys out, get into Web3, get learning, take this time to figure out stuff out. But until next time, I'm Crypto Kenny. This is Web3 Weekly. We'll see you guys next time.